Hello, I'm Fuli Batibo. This is Counting the Cost on Al Jazeera, your weekly look at the world of business and economics. This week, the battle for influence in Latin America. After ceding ground to China on the diplomatic and economic front, the United States seeks to win back its neighbors with billions of dollars in new investments. We explain how. Also this week, the pandemic confined many students to their homes. Those lucky enough were able to go online to continue studying. We look at one of the biggest winners from the pandemic, online learning, or as Silicon Valley likes to call it, EdTech. And the Afghans who are staying put as the economy crumbles around them. For this soft drinks maker, it's business as usual, but at what cost? China has used its $1 trillion Belt and Road Initiative to expand its economic and diplomatic ties worldwide, and now leads the world in trade with Africa, parts of Asia, and Latin America, a region which the United States has long regarded as its backyard. Over the years, China's ties with Latin America and the Caribbean has paid dividends. Total trade increased from almost $18 billion in 2002 to almost $316 billion in 2019. In 2020, Beijing's imports amounted to $165 billion, mostly of copper, minerals, and meat. From 2005 to 2020, China invested $136 billion in Latin America, with energy projects attracting 57% of the investment. Mining received 27%. And Chinese banks have become huge lenders to the region. Between 2005 and 2020, they loaned more than $137 billion. Nevertheless, although the U.S. remains Latin America's top investor, concerns have been raised in Washington about Beijing's influence. Well, let's get some analysis now with Jimena Blanco, who's Research Director and Head of America's Risk Insights at Verisk Maplecroft, and she's joining us from Andalusia in Spain. Jimena, very good to have you with us on the show. So how exactly will Washington counter China?
Well, I mean, it's interesting, the proposition that Washington can counter China on infrastructure, but also including principles, right? Because Washington's investment is not just for building roads and bridges or dredging ports. It has to do with, advancing gender equality and digitalization and lowering inequality in the region. But Washington has a lot of baggage that China doesn't. And so for me, the key question is to see how the Biden administration is able to implement these policies and whether it will be able to compete with China on infrastructure, or whether this will remain an ideological battleground and certain governments in the region will choose China because of the ease of access to finance and delivering large infrastructure projects, and others will choose Washington because of their commitment to Western principles that are coming from the White House.
What about their interests? I mean, Washington's interests could be boiled down to security issues, the war on drugs, of course, and backing right-wing governments. Am I being too harsh by saying those are really the issues that they want to focus on?
Well, I'm not sure if it's only the issues they want to focus on, but that will certainly be the criticism coming from, Latin American left-wing parties and governments, which have been in the ascendancy in recent years. So actually, if we look at where Deputy National Security Advisor for International Economics Singh went during his recent visit to the region, he chose 3 destinations very close to Washington. It was Colombia, Ecuador, and Panama.
Right.
And so clearly, this ideological link and common perspective on the world has a lot to play in this competition.
Right. Now, the Trump administration viewed China's engagement in the region with more suspicion. In 2017, the National Security Strategy stated that China is seeking to pull the region into its orbit through state-led investments and loans, and expressed concern about China's support for what they call the dictatorship in Venezuela. Is that a fair assessment?
I mean, of course, China has had relationships with Venezuela, which are, very valid to criticize because of, the human rights violations in Venezuela. But I think that's just looking at a very narrow focus, right? China has been expanding across the entire region. It's now the top trading partner of all main economies in South America. And it's gone well beyond those initial loans that it was giving to Venezuela for oil or even to Ecuador. And it's delivering significant investment in agriculture, in telecommunications, and in infrastructure, which are all areas that the region needs to develop significantly, particularly in the post-pandemic recovery.
So what do you think ultimately is China's objective in the region? The U.S. Southern Command has warned China is seeking to establish global logistics and basing infrastructure in our hemisphere in order to project and sustain military power at greater distances. Do you agree with that?
I think China's strategy in the region goes beyond, or it's not just about military strength. Of course, it's about, this geopolitical chess game where it's challenging the United States in its own backyard, a backyard that the United States left vacant for the last 20 years as it focused in the Middle East. Right. But it's also about securing strategic resources for China, not just because of food, right? Agriculture and, for example, pork meat are sizable exports from South America to China, but also securing access to raw materials like minerals needed in the energy transition. We're talking about lithium and copper, but also hydrocarbons. So it's not just about staging a military presence, but it's about securing China's strategic future.
And do you think China's economic ties have won it any diplomatic influence in the region?
Of course. And also, China, has a very professional diplomatic service with a strong presence. And in fact, if we turn that on its head and we look at, the Biden administration has yet to confirm ambassadors to the region. And so even on this diplomatic front, China is presenting a much stable and united front, as it were, than after the change of administration in Washington. We're still waiting to see confirmation.
Have some countries, for example, on the issue of recognizing Taiwan, have some countries clearly indicated that they're taking China's side?
Well, they have done, right? That was China's initial strategy or goal when it started developing relations with the region more strongly in the late 1990s, early 2000s, was to secure that switch. Right. And it has managed it across a number of economies. That was more of the political move. And then it became an economic move with loans and financing. And then it grew into direct investment and the growing presence of Chinese companies in the region. So the record of the last 2 decades has been one of growing Chinese goals as it accomplished its previous strategy.
Jimena, you talked there about loans and financing. And we all know that when it comes to China and loans and financing, also involved is the issue of debt, of course, as we've seen in countries like Sri Lanka and so on. And a recent congressional report suggested that some countries in the region have amassed unsustainable levels of debt owed to China and have become dependent upon commodities exports to China. So do you see, a scenario like, that the one that happened in Sri Lanka, for example, the country owing huge amounts of money to China also being replicated in the region?
We already have an example in the case of Venezuela. That is the most clear example. And there is another challenge here, right? If the United States is trying to compete with China on financing, the West has a lot of strings attached to its financing and has shallower pockets than Beijing. So if we're thinking about, principles of sustainable financing that the West applies and China does not, then that is another challenge to beat China at its game. But of course, for some administrations in Latin America, being able to bypass those Western standards and access cash readily available from Beijing is a very good short-term win, particularly as they head into elections in the aftermath of the pandemic and they need cash to splash and secure votes.
Jimena, thank you so much for your insight. It was really very good to hear your thoughts on this issue. Jimena Blanco is from Verisk Maplecroft, joining us from Spain. Thank you for being on Counting the Cost.
Thank you.
Afghanistan's industries are being squeezed because of banking restrictions and frozen assets. Some multinational companies are trying to keep their employees on and continue with production. But as Osama bin Javid reports from Kabul, staying afloat during an economic crunch is not easy.
It's 6:30 a.m. in Kabul, and the morning shift is ready to begin the day. A multi-layered security is needed at the largest beverage production plant in Afghanistan. A rare success story which began its carpet and tea trade more than a century ago and now has presence in 46 countries. These carbonated drinks are exported to the Middle East and Central Asia. The once family-owned firm is a multi-billion-dollar enterprise. It's a household brand in Afghanistan, and the workers take pride in maintaining the quality of their products. But since the Taliban took over, their revenues and production has been affected. It's mostly run by young Afghan professionals.
We have 2,000 employees in Afghanistan.
Many have chosen not to leave their country after foreign forces pulled out.
I have studied in Afghanistan, and I have to serve the nation and serve my soil and my country. That's the biggest reason I have stayed. Being in Afghanistan is not just about profit. Being in Afghanistan is about to provide services, provide products, and to contribute to the economy of the country.
But this company has been able to survive the tumultuous economy largely because its headquarters is not in Afghanistan.
Even during the economic crunch, this factory continues to produce 72,000 cans of energy drinks per hour. But this is an exception because the wider economy of Afghanistan is suffering and people cannot buy as much as what they used to.
The construction industry, for example, is at a standstill. Since contractors, aid agencies and people in general have no real access to cash, most equipment hasn't moved from yards. Haji Salahuddin says he used to send labour and equipment all over the country. Now he's laid off 12 employees.
In this month, there isn't any work for us. Banks are closed and I had to pay salaries. How can I manage with only $200 a week from the bank? My request to the Islamic Emirate is to stress on the banks to resume service. There are about 200 to 300 construction companies here. They've all shut down and the staff have been sent home.
But as the sun sets on the stationary construction equipment, the evening shift has started work in another part of Kabul. Workers here say Taliban fighters have not come to the company or made any demands. Although many are wary of the economic crisis, they say the improved security means they do not have to worry about being robbed or killed on their way home. They are hopeful their factory will continue its operation and in return attract investors to help revive the economy.
Now, the pandemic is reshaping the way we work, with many employees choosing to open up their laptops on a kitchen counter or home office if they're lucky enough. But it's also redefining the education industry. Unsurprisingly, there's been a boom in the so-called EdTech industry globally. Last year, investors put $2.2 billion into EdTech companies, according to EdSurge. And data from PitchBook shows the first half of this year has already surpassed that, reaching $3.6 billion. But monetizing EdTech apps has proven to be extremely difficult, even for the best EdTech apps like Duolingo. You can make a fun, great learning app, but not everyone will want to pay for it. And in China, authorities have cracked down on after-school tuition, wiping out $100 billion industry because it was becoming too expensive for parents. Well, the growing cost of materials is driving an increasing number of students to piracy. In March of 2021 alone, 195 million people visited educational piracy sites. With over 1 billion publications downloaded illegally each year, some publishers say their revenues are being hit by as much as 23%. So there's clearly a problem and something needs to change. And the person making that change is Gauthier Van Malderen, CEO at EdTech Perlego, who's joining us live from London. Thank you so much, Gauthier, for being on Counting the Cost. It's good to have you. So educational piracy is obviously a huge issue, but the bank of mom and dad doesn't have an endless stream of money. So how exactly does your venture work?
Yeah, so Perlego was built out of a personal pain point of mine, which was very expensive price of textbooks. I'd buy maybe an accounting book worth $200. I'd read 2 chapters of the book and never use it again. And what was really interesting is I was seeing that my friends and my peers were also doing the same. So what we've done is we built a company which is on a mission to make educational content more accessible. In short, we help publishers recuperate revenue lost from the secondhand book market and from piracy through convenience. And for students, they get a simple space where they can find all their core learning material for the price of a single book.
So is hybrid learning the new reality then now?
I think it's very much so. Using the analogy to maybe remote work, in the early days when COVID-19 started, it was a bit awkward for us to, work remotely. And I think very much the same will happen here. Using our own, looking at Perlego, in light of COVID-19, we saw a huge acceleration towards digital, both in terms of the publishers. So many more publishers gave us their full collections. And then what's really interesting on the other side, faculty, students, and institutions became much more proactive of using, a digital product in their learning mix.
But Gauthier, do you think that students who pay thousands of dollars for in-person tuition would be willing to accept blended learning? I mean, many feel shortchanged by the whole experience.
Yeah, it's a great question, and I think ultimately, yes, some students might feel a bit shortchanged, but overall, by providing convenience, by providing accessibility, and also by being more affordable, the total student population has a greater chance to learning, right? If I was to think about it today, maybe textbooks are accessed by the privileged few, whilst by providing a platform which is affordable, everyone, no matter where you are, could access their learning content.
But do you think online learning can really ensure global equity? I mean, if you take a look at the example of China, for example, the authorities there have decided that additional after-school learning is putting too much financial pressure on parents. So how do you deal with that aspect?
Yeah. Just to share some numbers, right? The global education industry is a $1.1 trillion industry. And what's really interesting is today only 4% of that is digital. So yes, you might have seen the recent news of China cracking down. Ultimately, it's on a subsector, right? It's on tutor platforms, test platforms, and exam prep platforms. But it's a huge, huge industry globally, which is still very much ripe for disruption and much more growth in the digital side of things.
But it's the case that, wealthy parents are, of course, able to get extra tutoring support for their children, but for low-income families, the outcomes very often are not so good.
I completely agree. And that's why at heart, we're on a mission to make sure everyone gets the same chance, no matter where you are in the world and no matter your background.
Right. And what about bridging the technology gap? I mean, technology can be isolating, of course. How do you overcome that? Yeah,
so again, to share some numbers, right? EdTech industry is in its infancy. Last year, a total of $6 billion was invested into education companies. This year, it's already at $13 billion and expected to close at $16 billion. And you're completely right. Some people might not have access to laptops or to internet. But I truly believe that by being digital, you can drive more accessibility across the industry. So, for example, with Perlego, we've got Perlego Lite, or we also allow students to download the books offline. So I think, on the contrary, digital here is to help bridge that gap.
Well, sounds exciting indeed. Best of luck on your venture. Gauthier Van Malderen, CEO of EdTech Perlego, joining us there from London. Thank you very much for your time. We appreciate it.
Thank you, Fadi.
Italy's 75-year-old national airline will close for good. It'll be replaced by a smaller state-owned carrier called ITA. The Italian government has invested more than $1 billion in hopes to avoid the financial turbulence that dragged down Alitalia. But the old carrier's staff are wondering where they'll fit in, as Adam Rainey explains from Rome.
Riding to protests, that's how Alitalia flight attendant Angela Amorino now spends her days after 11 years in the skies. When ITA, the new airline set to replace flag carrier Alitalia, launches on October 15th, it's unclear if Amorino will have a job. The day before speaking to us, she had just returned from working a long-haul flight.
When I left New York and when we were taking off, I felt that was the last time could be the last time, my last flight. And then we are really suffering. It's, really hurt.
Some 11,000 Alitalia employees are set to lose their jobs. Trade unions are trying to pressure ITA to hire the majority of them back. With plans to fly fewer routes, ITA has said it will hire 2,800 workers when they launch and another 3,000 next year. Alessandra Migliaccio is worried.
If I go in an office and say, good morning, I'm a good flight attendant, they say, oh, okay, very nice. What we can do with you? Nothing.
The workers also want to keep wages at the same level. Unlikely, since the European Commission ruled this month that ITA is distinct from Alitalia, hence not bound by its contracts. That also means ITA isn't on the hook for 900 million euros in illegal state support Alitalia received. For decades, Alitalia has defied travel to Italy. Even popes relied on the carrier to reach their far-flung flock. The brand has also come to symbolize huge losses.
From 2000 to 2020, they never close a balance sheet that is positive. So the annual account, every year they lose money.
So that's not a good predictor that ITA will do any better.
Yeah, exactly.
Despite its troubled past, ITA sees real value in the brand name Alitalia and is willing to spend big money on it because they realize the name is synonymous with Italy itself. And they've put in a bid, perhaps topping more than 200 million euros for the rights to that name.
Some aviation experts question the whole idea of a flag carrier.
If I was an Italian, as I said, if I was an Italian taxpayer, I would think that, maybe we can spend our money on better things. Do we need an Italian airline in modern Europe? Once upon a time, perhaps we need an Italian airline because otherwise no one would fly to Rome. Really? You're telling me that?
Not a philosophy shared by the government. Indeed, Italy is betting on the new airline, backing it with more than 1.3 billion euros in state funds. The hope is that ITA, perhaps just a reborn Alitalia, will find its wings and take off financially.
People in western Argentina have noticed the ground shaking beneath them much more over the last year. More than 200 earthquakes have been reported in that time. Geologists blame them on fracking. Teresa Bo reports from Sauzul Bonito in Neuquén province in southwestern Argentina.
It's one of the largest shale oil and gas reserves in the world. Vaca Muerta is located in Argentina's Patagonia region. It covers an area of over 30,000 square kilometers, and extraction companies have invested heavily in exploiting it. Vicente Sandoval has been living in the regional town of Sauzal Bonito all his life. He says while he's glad of the new economic opportunities brought by the companies, there is also a downside: earthquakes.
These are not natural movements. I never felt it before. I felt 4 very strong shakes that broke my house. The house started to shake, and for a few seconds, we all looked at each other, and then it stopped.
Increasingly, locals are blaming the practice of fracking for the seismic activity. Fracking uses thousands of liters of water and sand that are injected in the soil at high pressure to push out the oil and gas. Scientists continue to debate whether the practice can provoke earthquakes, although a recent study in Argentina says there is a direct link between fracking and seismic activity.
Right across this river, there's at least 90 sites where oil and gas are being extracted using fracking. People living in the area say that the seismic activity here began when oil companies started operating in this area. There's report of at least 36 small earthquakes happening in just one weekend.
Vicente's house has several cracks because of the tremors. He says he's hoping authorities will help him and his neighbors fortify their homes for what is likely to become a regular thing.
We are not denying there is an increase in activity. The importance is how strong the earthquakes are and how to prepare the population. We need to know who is doing it and how and where the population is. We need to sit down at the same table and plan how it's going to be done.
But almost everyone agrees Argentina's economy is struggling, and promoting oil and gas extraction is crucial to helping the country recover. But people like Roberto are concerned. He's a member of the Mapuche indigenous community and is worried about his children's future.
There are over 30 wells that have been marked in our territory. They're now working on the other side, but imagine what it's going to be like when they come over here.
Argentina's government is pushing to increase oil and gas production and hoping to increase investment in Vaca Muerta. Communities in the area are hoping their interests will be considered too.
And that is our show for this week. Get in touch with us by tweeting me, Foliba, at AJE, and do use the hashtag AJCTC when you do. Or drop us an email. Counting the cost at aljazeera.net is our address. There's more for you online at aljazeera.com/CTC. That'll take you straight to our page, which has entire episodes for you to catch up on. I'm Foliba Thibault. From me and the whole Counting the Cost team, thank you for watching. The news on Al Jazeera is next.